Welcome to Pip Insight Macro, the economic calendar briefing for the daily Forex news. Today is the 24th of July, 2026. This session has 0 high-impact and 7 medium-impact releases coming up. Let's run through exactly what's on the calendar and what it means for the major currency pairs. European PMI data flooding the markets this morning. Manufacturing and services figures from France and Germany could set the tone for the euro. Welcome to Pip Insight Macro. I'm your host, and this is Daily Forex News. We've got 7 medium impact events lined up today, with euro pairs front and center. Stick around as we break down what matters. Here is the full economic calendar for the daily Forex news. Let me walk you through each key event and what it could mean for the markets. We're looking at UK retail sales month-on-month data today, which measures the change in sales at the consumer level across the country. This is a crucial indicator because consumer spending drives roughly 2/3 of the British economy, so any significant shift here can move sterling significantly. The forecast is calling for a decline of 0.3% after a strong previous reading of 1.2%, which would signal a slowdown in consumer activity. If we see a bigger miss than expected, say, a steeper drop, that's generally bearish for the pound because it suggests weakening economic momentum and could prompt the Bank of England to take a more cautious stance on rates. A beat or smaller than expected decline, on the other hand, would support sterling as it reinforces the idea that British consumers remain resilient. The pound typically weakens on disappointing data relative to the dollar, euro, and yen, as traders reassess growth and rate expectations. Watch for volatility particularly in pound-dollar, which tends to be the most responsive to UK economic surprises. Pound-dollar and euro-pound will be your most active pairs, with pound-dollar likely to move lower on a miss and higher on a beat. Euro-pound tends to move inversely, giving you a good confirmation signal if you're monitoring both sides of sterling's strength. We're looking at the French flash manufacturing PMI, a quick snapshot of factory activity in Europe's second-largest economy. This early reading gives traders real-time insight into manufacturing health before the full Eurozone data drops, so it can move the euro pretty decisively. A beat above 51.0 would signal manufacturing momentum is building, which typically strengthens the euro as investors gain confidence in Eurozone growth. A miss below forecast could spook risk sentiment and weigh on the currency, especially against safe havens like the dollar and yen. The key here is that flash PMIs are surprise-prone. They're preliminary, so outsized moves aren't uncommon. Euro-dollar will see the most direct reaction, but euro-yen and euro-Swissy tend to amplify moves based on broader risk appetite shifts. Watch for follow-through once we get the full Eurozone composite PMI later in the week. Euro-dollar is your primary watch. Beats typically push it higher, misses lower. Euro-yen will follow risk sentiment closely, with strong data supporting the pair and weak data triggering a flight to yen safety. We're watching the French flash services PMI, a real-time snapshot of activity in France's massive services sector. This is one of the first readings we get for Eurozone economic health, so traders pay close attention to see if the services economy is expanding or contracting. The forecast sits at 47.5 versus the previous 47.4, a tiny expected increase, but remember, anything below 50 signals contraction in the sector. If we see a beat above 50, that's euro positive because it suggests the services economy is actually growing, which could spark a relief rally. A miss below expectations would reinforce concerns about Eurozone weakness and could weigh on the euro across the board. The reaction typically happens within minutes, with larger moves coming if the data surprises significantly in either direction. Keep in mind this flash estimate often gets revised, so the initial shock matters more than the final number. Euro-dollar and euro-pound are the most actively traded pairs and will see the heaviest volume during the release. Expect the euro to move higher on an upside surprise and lower on a downside miss, with Euro Yen and Euro Swissy following suit as safe haven demand shifts. We're looking at the German flash manufacturing PMI, which is a real-time snapshot of factory activity across Europe's largest economy. This data hits the wires before the final reading, making it crucial for traders watching the euro's next move. A beat above the 50-point for forecast would signal manufacturing momentum is accelerating, potentially strengthening the euro across the board. A miss below that level suggests the sector is losing steam, which could weigh on euro pairs and push them lower. The 50-point level is the critical threshold here. Anything above indicates expansion, anything below signals contraction. We'll want to watch the magnitude of the surprise as much as the direction, because German factory data carries outsized influence over euro sentiment. This flash reading often sets the tone for broader eurozone economic expectations. Euro-dollar and euro-pound will see the most immediate reaction, as they're the highest volume euro crosses. A beat typically sends both pairs higher, while a significant miss could trigger quick downside moves in these pairs. We're looking at the German Flash Services PMI, a critical real-time snapshot of activity in Europe's largest services sector. This number hits the wires today and could significantly influence euro positioning, so let's break down what to watch for. The forecast is sitting at 49.0, up from the previous 46.8. That's a meaningful improvement that suggests services momentum might be picking up in Germany. If we see a beat above 49.0, we're looking at a potentially bullish signal for the euro, as it would indicate stronger economic momentum heading into the rest of the quarter. A miss below forecast, on the other hand, would reinforce weakness narratives and likely pressure euro pairs lower across the board. The key threshold to remember is 50, anything below that signals contraction, so even at 49.0, we're still technically in contraction territory, which limits upside enthusiasm. Watch for volatility spikes in the first 30 seconds post-release, particularly if the actual print surprises significantly in either direction. Euro-dollar and euro-pound will see the heaviest initial reaction, with euro-yen and euro Swissy following close behind as carry trade dynamics activate. On a beat, expect euro strength across the board. On a miss, watch for safe haven flows into the yen and franc that could pressure those pairs lower. We've got the flash manufacturing PMI coming in for the eurozone, and while it's a lower impact release, it still gives us a real-time pulse on factory activity across Europe. This preliminary read often sets the tone for broader economic sentiment in the region. We're looking at a forecast of 51.5 versus the previous 51.3, so we're expecting a modest uptick in manufacturing momentum. Since this is a flash estimate with relatively low market impact, we shouldn't expect dramatic moves, but any significant miss could trigger some minor volatility as traders reassess their growth expectations for the eurozone. Euro-dollar will likely be your most responsive pair if we see a meaningful deviation from the forecast, as it's the most liquid euro cross and sensitive to broader eurozone economic data. We're looking at the Flash Services PMI for the eurozone, a preliminary reading that gives us an early snapshot of activity in Europe's service sector. This data hits the wire today and helps traders gauge economic momentum heading into the rest of the month. The forecast is calling for 49.8, up slightly from the previous 48.9 reading. While this shows a modest improvement in services activity, we're still sitting below the 50 mark that separates expansion from contraction. Given the low impact designation, we'd expect muted price action, though any significant surprise could spark brief volatility in euro crosses. Euro-dollar typically sees the most responsive movement to eurozone PMI data, so that's the pair to keep closest watch on during the release. We're looking at the German GfK Consumer Climate Index, which measures German consumer sentiment and spending intentions. This is a key early indicator for eurozone economic health since Germany is Europe's largest economy. The forecast is showing an improvement to -28.7 from the previous -29.2, suggesting consumer confidence is gradually recovering from depressed levels. While this is a positive signal, the index remains deeply negative, so don't expect any dramatic market moves. With low impact designation, we're likely to see muted volatility across euro pairs today. Euro-dollar typically shows the most pronounced reaction to Eurozone sentiment data, though any movement should remain contained given the low-impact classification. We've got the flash manufacturing PMI coming in for the Eurozone, and while it's a lower-impact release, it still gives us a real-time pulse on factory activity across Europe. This preliminary read often sets the tone for broader economic sentiment in the region. We're looking at a forecast of 51.5 versus the previous 51.3, so we're expecting a modest uptick in manufacturing momentum. Since this is a flash estimate with relatively low market impact, we shouldn't expect dramatic moves, but any significant miss could trigger some minor volatility as traders reassess their growth expectations for the Eurozone. Euro-dollar will likely be your most responsive pair if we see a meaningful deviation from the forecast, as it's the most liquid euro cross and sensitive to broader Eurozone economic data. We're looking at the Flash Services PMI for the Eurozone, a preliminary reading that gives us an early snapshot of activity in Europe's service sector. This data hits the wire today and helps traders gauge economic momentum heading into the rest of the month. The forecast is calling for 49.8, up slightly from the previous 48.9 reading. While this shows a modest improvement in services activity, we're still sitting below the 50 mark that separates expansion from contraction. Given the low-impact designation, we'd expect muted price action, though any significant surprise could spark brief volatility in euro crosses. Euro-dollar typically sees the most responsive movement to Eurozone PMI data, so that's the pair to keep closest watch on during the release. Based on today's releases, the pairs most at risk of volatility this session are Euro-dollar and Euro-pound and Euro-yen. Here is a breakdown of why each pair is in focus. That wraps up the complete daily Forex News economic calendar breakdown. The key theme today is European PMI data drives euro volatility today. Keep a close eye on the release times. A surprise deviation from forecast is often where the real moves happen. This is educational content only. Trade safely and manage your risk. Thanks for watching Daily Forex News. Don't forget to like and subscribe for tomorrow's economic calendar. Catch us on X at Forex Insight. See you next time.